Hello and welcome to Business Mornings, the fourth trading day of December, and actually the fourth trading day of this first trading week of December. I hope your portfolios are shaping up, just fine. But let's get to the top stories I should keep an eye on now, starting with what's playing out in the oil market. We see oil prices, they edge higher with renewed Ukrainian strikes on Russia's oil infrastructure. That's raised fresh concerns about supply disruptions. The latest attack targeted the Druzhba pipeline in Russia's Tambov region, the fifth strike on a major route supplying crude to Hungary and Slovakia. We see the impact there on the market, but WTI, that's still sub 60. Even with this jump, we saw the rise, that started yesterday. Brent crude, $63.23 a barrel, up 1.3%. So we're still seeing strong moves in December, when it comes to, oil prices. Analysts say, weak market fundamentals, continue to limit the upside. I guess that's why I'm still seeing WTI there, sub 60. So other stories now. The Federal Executive Council has approved the 2026-2028 medium-term expenditure framework and fiscal strategy paper for transmission to the National Assembly. Under the 2026 budget assumptions, the government is targeting oil production, 2.06 million barrels per day, with a benchmark of 1.84 million barrels per day and an oil price of $64.85 per barrel. The exchange rate set at 1,512 naira to the dollar. GDP growth projected at 4.68%, signaling optimism about Nigeria's economic outlook. We'll unpack all of that later on the show. First off, let's get a check on how the market closed yesterday. That's the local boss. We see definitely 0.27% up after reclaiming the 145,000 level. See the NGX still moving quite strong in this trading month. If we look at volume and value, although we had less value compared to the previous day's trade, just about 20.97 billion worth traded deals, 21,513. So, definitely we're still seeing that positive sentiment right here in December. I guess maybe signaling a Santa rally for the local boss. We'll see if that, holds. And we see the top gainers. Guinness top there, 10%. NCR, 9.98%. For the losers chart, Veritas Capital, that's down about 4.47% yesterday's close at 1 naira 71 kobo. So definitely that's the picture right there for the local boss. It's still positive, maybe a Santa rally at this point. To other stories now, let's get a gauge now on economic data. Nigeria's business environment has continued to strengthen towards the end of 2025, according to the latest NESG Business Confidence Monitor. The Business Performance Index climbed to 113.3 points in November, up from 111.3 in October and 97.3 points a year earlier, marking 11 straight months of growth. Trade drove the gain, soaring to 186.5 points, while all major sectors stayed in expansion, including non-manufacturing, manufacturing services, and agriculture. So that's the latest data right there from the NESG Business Confidence Index. All right, let's look at currency now. The Central Bank of Nigeria has raised cash withdrawal limits nationwide, increasing weekly withdrawals to 500,000 naira for individuals and 5 million naira for corporates. A new circular also sets daily ATM withdrawals at 100,000 within the same weekly cap, marking a shift from previous cash restrictions. However, the limits on third-party check encashment remains at 100,000 naira. All right, still looking at payments now. The Pan-African Payments and Settlement System, PAPS, now links 19 African countries and 160 commercial banks, enabling cross-border payments across the continent in seconds. According to the CEO, Mike Ogbalu. I had to sit down with him at their latest event, and he did talk about how ready Africa is for PAPS. Take a listen.
We cannot define payments on the continent in the way that they insist that we define it. We have to define it what payments means for the African continent. Now you ask, is Africa ready? This vision started in 1963 when the first resolution of the AU, and you can go and Google it, they actually said that Africa needs a Pan-African Payment and Clearing Union, okay, 1963. So we had a set of visionary forefathers who understood the need for payments to drive trade. Now, where we are today, geopolitics shows us that existing payment systems may not necessarily be able to serve Africa's needs. We've seen how payment systems can be weaponized, okay? And therefore, we needed something that is African, built by Africans, controlled by Africans. It doesn't make sense for a payment that is originating out of Lagos and going to Accra to travel to New York before going to Accra. It just doesn't make sense. We don't travel that way. We don't send messages that way. We do not move our goods that way. So why should money move that way? So on the coming on stream of the AFCFTA, it became more imperative, okay, that we have a fit-for-purpose payment system. Now, what the AFCFTA has done is taken 54 different rules, taking 54 different ways of handling movement of goods, trading trading in services, intellectual property, and consolidate all of this into a single consistent set of rules for trade on the continent. The one thing that is missing, which is critical for a market to work, is an acceptable means of payment. Now, yes, we can keep our heads in the sand and say, let's wait till we have a single currency. But the next best thing is to create a payment system that understands all the different currencies and is able to facilitate trade as we are today. Right. So the continent is ready. We now have rules for trading among ourselves. We're on the journey towards a single market. A consistent and seamless payment system is a critical ingredient to achieving that single market.
U.S. petroleum sector showing renewed momentum, with the downstream segment posting 19.4% growth in the third quarter of 2025, a sharp turnaround from average declines of over 35% in previous years. Let's dig further now on this data with Mr. Bismarck Rouhani, MD, CEO of Financial Derivatives Company, and he joins me right here in the studios. Great to have you, sir. Good morning.
Good morning.
Fantastic.
Nice to be here. Right. Good.
Yes, sir. And it's yeah, you did promise us the 30th December.
Yeah.
And I guess it's shaping up somehow.
It is. It is.
To be that.
Starting early.
Starting early. Exactly. All right. So looking at this data, 19.42% in Q3 2025. That's the downstream petroleum sector growth. Yeah. At this point, how surprised were you? About this data?
I wasn't surprised, but the truth is that 19.42 growth in Q3 for refining. What was it the corresponding period last year? It was minus 30. So when you add the two together, the petroleum refining actually grew by 50%. That is huge. Not only did it grow by 50%, it was consistent. That is from that point last year to now, there have been at least 9 different price reductions by the Dangote refinery, right? So we had a sector that was in the doldrums. In other words, we had 4 refineries that were not working and some modular refineries that were finding their feet. Now, all those are back. So when you compare the production and the growth this year compared to what it was at this time last year, it's actually 50% growth, and that is massive. Now,
what are the drivers, at this point?
The major driver is that the Dangote refinery kicked into action. 2, because of that, the Nigerian NNPC refineries also woke up, and the modular refineries also woke up. So when you take the aggregate, you find that the sector actually grew massively. But that was not the fastest growing sector, but it's worth noting. But what is more important about anything else is that this sector has very serious linkages, because you look at downstream sector, and the downstream sector, you have the petroleum sector is made up of 3 major segments: exploration and production, which is upstream, where you have deep water, offshore, and land and swamp. That is there, and then of course you just announced in the budget that the budget is estimating that we'll grow we'll be producing 2 million barrels a day.
2 million barrels
A day, but
that's a big number.
That's a big number. It's very optimistic, but you never know what happens. Right now, the next thing is that you have the midstream, and then the downstream where the refining is taking place. Now, the linkage is that when the petrol price comes down, it has a major impetus in terms of, as you can see here, that's downstream: refining, distribution, retail of petrol, diesel, aviation fuel, and lubricants. So the sector size is about $7 billion. Average growth rate has been, over the past 5 years, has been minus 35. So when you have minus 35 as the average growth rate over the last 5 years, and all of a sudden you are up 20%, right? Then that tells you a lot. Recent average growth has been 15.57, but you have key players, NNPC, Dangote Refinery, and independent marketers. High volume, low margin. So this is not a game for the faint-hearted. These are for the big boys, right?
For the big boys.
Absolutely.
Right, and looking at the key players at this point, it's not been really a rosy relationship.
I know.
Between these players this year.
No, there's competition, right? But after a while, competition becomes co-opetition. That is, you have to cooperate and compete. But one thing is clear: Dangote Refinery is the price leader. Dangote Refinery is using a hub and spoke strategy, that is refining here and producing all across West Africa, selling across West Africa and Central Africa. So it's a major player on the African continent. And what is more important, he has guaranteed that he'll be doing 50 million liters a day and doing 1.5 billion liters for the month of December and January. So one thing is clear, that in the month of December, there'll be no queues, there'll be petrol across, and even diesel at the same time, aviation fuel. So that is not what we're used to. Normally, we have celebrations, but we also have queues. Now, we will have celebrations and no queues, so it will be double celebration. That's called dirty December.
Dirty December with no queues at this point. Maybe some traffic.
Oh, well, that's fine.
We'll take traffic.
Oh, yeah. But let's not have queues.
Exactly. Let's not have queues. So, looking at the Dangote refinery at this point, there's also projections that it's going to even produce more.
Yeah.
And even grow bigger.
Absolutely. You see, it's expanding to 1.4 million barrels a day by 2027-28.
Right.
And again, like I said, the hub for Central and West Africa is guaranteeing 50 million liters daily and 91% estimated daily demand of 55 million liters. So what are we getting here? We are rather than exporting crude, we're exporting refined products to the whole of Africa. So you are getting, the take for Nigeria is much higher. But what is extremely important to note is that there has been what we call discriminated pricing across the whole of Nigeria. For once, as we go into January 2026, we are going to have uniform pricing. And then the big thing is about the trucks. The 5,000 trucks he has, actually distributing across the country efficiently, and that reduces price discrimination across various sectors. So what you have is that whilst in Maiduguri they were selling petrol at X, and in Sokoto they were selling at Y, and in Port Harcourt they were selling at Z, everybody is going to be selling at the same price. And that uniform pricing actually brings about efficiency and makes companies more competitive. I think that is very important to note. But you see, we also had this question of the, the 15% import duty to protect local manufacturers. That has been put on hold for a while, but it is important that the government has to revisit it so that you protect local industry to grow. This sector that was growing at minus 35%, all of a sudden is growing at plus 20%. And so what you want to do is to accelerate that, and so they can take advantage of it. So you bring back that protection and ensure that there are milestones that if you are protecting the industry, they must deliver so much in growth, so much in investment. But I want you to go back. You talked about the Nigerian Stock Exchange just now going into green. Huh?
Right.
What is being, the Dangote refinery is going to be listed in 2026. And from just back of the envelope evaluations, we are talking about almost about $40 billion market listing. The Nigerian budget for this year, for next year, is $37 billion. That is the whole of Nigeria. Federal government of Nigeria spending $37 billion. The value of this investment right? The stock market capitalization of this investment is going to be like almost $40 billion, more than the Nigerian budget for 2026. That's a very important point to take note of.
That's quite incredible.
And so if you list it, it also has the impact of almost doubling the market capitalization from what it is today, because NMPC is also going to list. And so we are saying the market capitalization, which today is about 92, 93 trillion naira, I don't know what it is, it's going to go all the way up to 240 trillion naira. And that's huge. That's huge.
Even in dollar terms.
Oh, yes.
That's a lot of money.
It becomes the second largest market, stock market in the whole of Africa. I think that's important. And it's a signal that the more democratized the ownership, the more people feel that they're benefiting from the goods, from the upside, but also they are sharing the prosperity of the nation. That, just like when MTN was small, very narrow ownership, now it's broad-based. So when they declared their dividend, you saw what happened. The market was euphoric. So that is what's going to happen when this goes on. And then, you now go on to what the impact of Dangote's increased production from 650 million barrels to 1.4 million barrels a day, what it will do to the economy as a whole in terms of growth, in terms of employment, and bringing down the price, because inflation is linked to the price of logistics and petroleum products. So if that happens, everybody benefits, the government benefits, the economy benefits, and the people benefit.
Right. And talking about benefiting, at this point, definitely you did mention the linkage between, petrol logistics and, the price, and also what we have to pay, at the pumps at this time. It's still a major bite. Now, I bought fuel this morning, and it pinched me a lot. This morning, I'm not going to lie. When do we see prices that don't pinch when we go to the pumps? How many years? I know it's market-driven, but
no.
I'm tired of the pinch.
No, let's take it. You see, when we're talking about economics, with micro is you and I, persons. Macro is everybody together. If Nigeria's productivity, and we are projecting 4.7% growth in 2026, right? If we are growing from $250 billion to a higher level, and productivity increases, you will find that, generally speaking, your income should increase. So there's what you call price inflation and also wage inflation. So if the economy is actually beginning to grow, then everybody should expect some wage reviews as we go in, as well as productivity. So that's the second part of it. But one thing I want you to note is that before now, at this time, there were subsidies being paid, people were buying foreign exchange to bring in refined products. That has stopped. So one of the reasons why the economy is probably doing better now is because the naira has been appreciating. And it's interesting that the budget this year is based on a value of 1530, right? So it means that we've seen the naira, before that, it was as high as 1910. It has now come down to 14 something. Now, because of this local production, we are beginning to see naira strengthening, together with the price of petrol coming down. Generally speaking, that should actually begin to translate into higher value for the money in your pocket. So it's not just the wage, but you see that sometime last year you were buying petrol about 1,100 a liter. Now you're buying it at 920. It is expected that it probably come down. It came down anyway before to 841. So if it comes down to, say, 850, right, sometime next year, that's money in your pocket. Right. And then maybe you go to fewer places rather than driving around in the old town.
The Oliver Twist in me is looking for maybe around 300 per liter to 400. That's the Oliver Twist.
No, you wait for a long time.
Yes.
That's not going to happen.
Wishful thinking.
No, because across in Benin Republic and Ghana, they're paying $1.2 per liter, right? Now, we are paying about 76 cents per liter. So if the guys in Ghana, in Cameroon, in Niger, and Benin Republic are paying $1.20 for a liter, and we are paying 76 liter, you are ahead of them. Right?
Maybe my problem is I'm still trapped in the former prices.
No, we can't be trapped. We have to look at the future is what is more important than anything else.
Okay, no problem. So what are we seeing? 2025 is rounding up, at this point. What are we seeing in 2026 for this industry? do we still see the big players still have the little, tension, between them, or is that behind us?
The price war is going to continue, right? Because what's happening? If the price of oil globally, I think that's what we should expect. I saw that $63 a barrel, which was the budget. And the budget is based on $64 a barrel. I don't think that's realistic. I think that we should prepare for $60 and below, right? Because everybody's saying that we're going to 55. Once the Ukraine-Russia settlement takes place, the price of oil is bound to drop. In fact, today, Modi, Putin is visiting Modi because he wants Modi to buy some of his oil, right? So let us assume that the price of oil drops to $55 a barrel. Nigeria is going to be hard put. So even the importers are going to bring in, the price is going to drop, but our own oil revenue will drop. So we have to deal with that challenge, right? And that is why you find that the budget of 2026 is cautiously realistic. I don't want to use cautiously optimistic. Cautiously realistic because there are going to be some hard choices that Nigeria has to make. And so if that happens, more stable fuel supply right across the country, downstream sector will boost and there will be spillover effect into manufacturing and logistics. Total logistics cost of companies' operating costs is about 28.1. If that comes down to, say, 15%, you find that price of goods by Nestle, by Guinness, Heineken, Dangote, Boa, all of this. So what are the companies that you have? Boa Foods, you have Dangote Cement, Boa Cement, Guinness, Nigerian breweries, Okomo Oil, Presco. So there are some good days ahead for the stock market. So
fantastic. Fingers crossed at this point. And for those on the sidelines, not in the market yet, I guess it's time to start looking for position.
Yeah, but
before all of this big,
not a dead cat bounce.
Santa Rally.
Yes.
Looking forward to that. Thank you
Absolutely.
so much, Mr. Bismarck-Rani. Always great having these conversations with you, and thank you for an interesting 2025 so far.
Absolutely. Thank you very much.
Thank you, sir. All right, we'll take a break now. When we come back, we'll look at it's an interesting day for banks. It's actually International Bank Day. That's celebrated globally on this day, 4th of December. That started, I think, 2019. We'll unpack what that means for the banking industry in Nigeria and globally. That's at the moment. Just stay with us. All right, welcome back. Well, today we mark International Bank Day. It's celebration of the global banking profession and the vital role banks play in economic growth. As Nigeria's banking sector continues to evolve, questions around professionalism, regulatory standards, and global best practices are more relevant than ever. This conversation will explore how Nigerian banks have progressed over the past decade, the specific significance of International Bank Day for local banking professionals, and the key trends and regulatory initiatives likely to shape the industry in the years ahead. Joining me now for this conversation, we have Professor Pius Deji Olariwaju, is the President and Chairman of Council, Chartered Institute of Bankers of Nigeria. Joins me via Zoom. Great to have you on the show, sir. Good morning.
Good morning. Thank you for having me on this program this morning.
Fantastic. It's great to have you, sir, and happy International Banks Day. I guess, the day celebrates the global banking profession. How do you think, Nigeria's banking industry has evolved, so far? Today we're driving, focus on what's played out, so far, in Nigeria's banking industry, from professionalism, global standards. How have you seen it over the past decade?
Yes, it has been a great one over the past decade. You find that Nigerian banking sector has undergone a significant transformation, evolving towards greater professionalism in the industry and also alignment with the global best practices that we are noted for. The central to this evolution has been the Central Bank of Nigerian drive for stronger capitalization and regulatory oversight, stricter capital requirements, and enhanced, supervisory measures, have ensured that banks maintain sufficient buffer to absorb economic shocks and also support large-scale finance and reduce systemic risk, that we encountered before. In the area of corporate governance, this has also improved markedly, with the updated CIBN guidelines, alongside with the code of corporate governance, which have formalized all procedures which we are now enjoying, strengthen accountability, and align banks' operations with international best practices. Also, in the area of digital banking, Nigerian banks have embraced advanced digital banking technology, including mobile banking that all of us are enjoying today, internet banking, digital wallet, and agent network. These innovations have expanded financial inclusion, streamlined operations, and improved service quality, bringing Nigeria closer to the global best practice.
So what was
also,
it?
The area of compliance, the center has also strengthened compliance with global norms in areas such as anti-money laundering, cyber security, market conduct, and further enhancing credibility and fostering, foreign investment, which has improved tremendously in the last 1 year.
Okay, so what does, International Bank Day, what does it mean, specifically for Nigerian banks, and banking professionals here, in your opinion?
Yes, the International Bank Day is a great for all banks globally, with particular reference to Nigeria. It's a global recognition that banks play a very pivotal role in the ecosystem. So, International Bank Day observed globally on December 4 as designated by the United Nations holds particular significance for Nigerian banking sector. Number one, it is an opportunity for us to honor these bankers and customers who have already played very significant role, in making sure that we have an ecosystem and a financial system where financial intermediation is seamless. And you find out that it's not just a mere people observance. It is a moment to celebrate the vital roles of the bankers in driving economic growth, and a day to honor the millions of customers whose trust sustain and strengthen our financial system, even in Nigeria and at the global stage too. There is also the day also provide opportunity to reflect on sector progress in governance, capitalization, and digital innovation. The truth of the matter is that for any organization, there is need for us to be able to re-examine ourselves from time to time in line with what Socrates said. We need to examine how far have we gone, where are we now, where are we heading to. These are the opportunity for us to start that reflection that is very necessary. If you look at the themes of this year, some of them empowering sustainable development through finance, emphasizes fundamental role of trust, innovation, and ethical leadership that is shaping into the future of banking. So we have the opinion that as far as they are concerned, the Salesforce of bankers remain, unwavering in our commitment to championing excellence, promoting, sustainable finance, and strengthening the professional values that anchor a stable, trusted, and future-ready banking. The furtherance of this commitment is to be henceforth hold our annual ethics and professionalism summit every December. Come next year, we will be invited to this program where we will celebrate all our leaders who have made mark in the industry and corporate customers who have excelled, at the global scene.
Right, and definitely there's so much talk, about regulation, different sectors in Nigeria and different industries. How is the CIBN, working with regulators, like the CBN, to ensure that Nigerian banks meet international best practices?
Yes, the truth of the matter here is that we have been working in concert because we believe that it's need for all the major stakeholders to work together. We work together with the CBN. We are working together. The CBN is main regulatory body. We are also working with NCLC that is performing that supervisory role. For example, we have the area where we are making impact is in the area of competency framework. The competency framework enforced by the institute ensures banking professionals, all our members in Nigeria, to possess the knowledge, the skills, and the ethical standards required addition to that, in the area of code of conduct within the industry, the CIBS is the secretariat to the Bankers Committee, Subcommittee on Ethics and Professionalism. The subcommittee is currently leading a comprehensive review of the industry code of conduct to address gaps, remove ambiguities, and align with the digital advancements, evolving regulations and contemporary customer expectations. In the area of media, too, we have not been lacking behind. The subcommittee of ethics and professionalism has also successfully resolved numerous disputes between banks and customers arising from sharp practices on professional conduct. So this has been on a record. We have handled about 2,455 cases on behalf of this committee, and we successfully resolved 2,415. That all have ended in court, and exactly the litigation will take time. And in addition to that, we also, put in place on a yearly basis an annual seminar justice for judges on banking and other matters. The institute, in collaboration with the National Judicial Institute, the Nigerian Bar Association, Law Enforcement and Anti-Graft Agencies, the Civil and Interbank Settlement System, Association of Legal Advisors and Company Secretaries, we have been working together to make this conference is very robust, and where we can share and share experience with one another.
Right, and definitely we know banks they play a crucial role, when it comes to supporting businesses, households at this point. And there's been a lot of talk recently about Nigeria's mortgage sector, and how Nigerians should get better mortgage rates, and be able to buy things without having the cash upfront. In your view, do you think Nigerian banks have done well in the past 10 years when it comes to supporting businesses, supporting households? What's your opinion on that?
Yes, there's no case saying that we have done very well, reasonably well in what we have been doing over the years. You find out that in the area, for example, for the past 5 to 10 years, we have been playing pivotal roles in this area. For example, in the area of digital transformation, if you look at the Nigerian banks, they have been able to do a lot of things in the area of digital transformation, which has done a lot to help the system. And also, digital currency is now in place. These are some of the things that we have done over the years and we need to do. Then there is also stricter regulation. Nigerian banks will see stricter and more complicated, regulations reflecting global trends, in this matter. And also, in the area of financial inclusion, we have also played a very pivotal role in that respect.
All right. So, can we expect more support? Recently we got this year we got the first rate cuts from the CBN MPC, but we got a whole decision next. Do you think Nigerians, businesses can expect, better rates, from the banks, going forward?
Yes, definitely. The directive being given by the CBN is to make sure that there is stability within the system, and you will find out that if much of the idea is not 2023, but the real idea came into practice in 2024. And there are a lot of things that is commendable about this new arrangement. This other new arrangement for recapitalization, for example, you will find out that the time duration for this program has been extended from what it used to be. Now, 2 years gap were given to the operators. And it is noteworthy, to mention that as now, since they have already fully complied, 20 of those institutions are also in the process of actualizing their dream of building capital. And there are a lot of benefits that is attachable to this. Number one, you find out that the banks themselves will be able to stand very firmly. That will be of interest to foreign investors to come and invest in the system. And also, we will be able to finance large ticket transactions that have been a problem. If you look at the environment, there are a lot of infrastructural inadequacy in terms of roads, in terms of airlines and everything. And we believe with this capital now, being raised, because if you look at the authorization something, you find out that with 500 billion believe that this will go a long way to make sure that we have a very robust, economy, and it will go a long way, to increase the level of financial intermediation within the system. And when that is done, one of the challenges we have been having and been talking about is the issue of financial literacy.
All right, guess the internet there.
It is also noteworthy for us to know that even there's a vast improvement already. Now the inclusion rate is at 74%. And we believe that the 26%, the way things are going on, in the next 3 years, we will be getting there around to 100%. And when that is done in the system, it makes the payment system very seamless, and everything will work for better for the economy as a whole.
All right, definitely we're hoping for the best. But what trends do you expect, that will shape Nigeria's banking industry, say the next 5 to 10 years?
Yes. Over the next 5 to 10 years, because we are into research from time to time and we work what is going on in the environment, several powerful forces definitely are likely to reshape the Nigerian banking industry, altering how banks operate, how the bank competes, how they create value. People want to know, they want to do growth and have transaction value that is creating value. Broadly, the landscape will be defined by digitalization. There is no doubt about it. Stricter regulation, because the CBN governor insisted it, even in the last dinner, that the way to go is that there will be stricter regulation, more intense competition from the fintech, and the shift towards a more resilient, better capitalized financial system. So one of the things that we should be looking also is digital transformation that we go on, and especially in the area of AI-driven services, area of artificial intelligence, area of open banking, framework. All these are going to shape. And already when you look at the provision in ISA, because most of our banks are quoted on the stock exchange, you find that the digital currency has come to stay. It will be one of the key trends changing the banking industry over the next 5 years. Then the disruption is going to stop. Definitely it's not going to stop. The fintech have tested what is happening in the business, and they realize that it's a gap, and they are filling that gap effectively. So most of the fintech will continue to disrupt the system, and I like the approach that some of our bankers are using now. What they are trying to do is to see how to collaborate with them rather than competing with them. If that is done, it will be win-win for both parties. And also, like I said, the area of financial inclusion too, very, very important. If we progress through agent banking, digital wallet, and mobile money, and regional penetration, especially as technology to add the cost of service delivery in rural and informal markets. So the risk management and cybersecurity will become essential priority. That's the truth. As far as digitalized cyber threats, fraud, and data breaches, we grow in scale and complexity. But one thing I can assure you is that the regulator and the operator, they are running, there's a consensus, there is a work in progress to make sure that we address it, because it's going to affect us negatively. So regional integration is already in place. Just day before yesterday, I was with PAPS, and you know what PAPS is all about? It's just to make sure that we have a very simple payment system across Africa. And when you look at the size of Nigeria, among other African nations, you will know that we occupy a very selfish position. And we know that this will go a long way to take us to build an African ecosystem that all of us will be proud of.
Yeah, very interesting. I did watch your speech at the PAPS event, but thank you so much. It was great having your projections for Nigeria's banking industry and sharing this conversation with you. Professor Pius Deji Olarinwaju is the president, chairman of council, chartered.
Thank God our bankers who have made it possible, and we celebrate them because you can see them doing all over Africa and as a global state, performing as a global state. And we continue to build capacity for them, and we continue to work in them to achieve our ecosystem that all of us will be proud of. Thank you for having me.
Thank you, sir. Happy International Banks Day. Thank you.
Thank you. Thank you, sir.
All right, now let's, our business editor, Int'l McCoy, recently sat down with Olumide Balogun, that's the director for West Africa at Google, to discuss one of the most critical issues shaping Nigeria's tech future, building a robust AI workforce. The conversation delves into strategies for developing and localizing homegrown talent. Take a listen.
how technology essentially can help accelerate industrialization. So how do we help get businesses from, nano to micro, micro to small, medium enterprises in a way that they can truly industrialize? So it's really how technology can be an enabler for that. I definitely think artificial intelligence is one of the very key technology tools that we can employ, but there are several as well. So I think they are, in fact, significant hurdles. But we also need to keep in mind the opportunity, because I think that's what gives us the inspiration, to keep pushing. As a company, all we think about is how do we help unlock economic opportunity for people, for businesses, and how do we work with the government as well? The government has a $1 trillion agenda, and we think that there's definitely things that technology can do in that light. As you said, skilling is one of the places that we think is a foundation. In particular, STEM education is critical, and so we've spent a lot of time doing that over the last few years. I'm proud to say that we've trained about 5 billion people. We started by doing basic digital skills training, just to get people to understand, just basic understanding of technology and digital, and how we can help them further their agenda, whether they're a student, whether you're going into a career, whether you're a business. And what we've done, I think, in the last couple of years is really go deeper. And so some people have asked me, you used to announce millions, now you do hundreds of thousands. And it's because we're going deeper, and we feel like we're now at the stage where we want people to get the type of skills that can help them get a job, or that they can apply to their business right now and they can help their business scale. Last year we announced 20,000 initiative to train youth, women and girls, because we think that there is an outsized disenfranchisement that's happening with women and girls. And so we continue to do that, and we're already seeing very, very incredible results. We did 10,300 businesses in a program we call the Hustle Academy, that essentially helps businesses get the technology and the digital skills that they need. We're already seeing that 80% of those businesses are already reporting an outsized increase in revenue. They're building structures now that's helping them have greater longevity. And we're really excited for what the future holds. As I said, we're very confident that the entrepreneurial dexterity, the resilience is there. We now need to do what we can to empower as many people as possible. We're supportive of the 3MTT, the 3 million technical talents. We've also announced, I think with the minister, we think that's an incredible initiative and a vision that we truly think that a lot of people should support and get behind.
So what sectors would you say have been most responsive, to your efforts in the empowerment and adaptation of technology?
So a lot of the time what we see is that there's businesses that we call them pure players, and we call them pure players because they can start and finish everything online. So essentially they can start everything from finding a customer to delivering a service online. So they're mostly people who sell digital goods or digital services. But we're starting to see a lot of uptake as well from brick and mortar type businesses, or businesses that we call traditional businesses. And then there's some in the middle that we call hybrid. So they're a mixture of businesses who use a lot of digital, but they still need some form of physical presence to essentially deliver. They need some form of physical presence, to deliver their goods to their customers. So I'll say that the pure players are the ones that the adoption is and the uptake is the fastest, of course, because that they see that the outsized impact is shorter. And then we see that the hybrid are also starting to really adopt these tools and take advantage of these opportunities. And traditional, quite a bit of work, I think, to do there. But again, we're very, very committed to the cause. We continue to see how, we can help accelerate skilling, raise the level of, technology knowledge, I think, across the ecosystem. And I think that if we do that, I think that, a $1 trillion economy would be something that's just very feasible for us to achieve.
Doesn't mean we can be expecting, e-commerce to take over the services. We saw an improvement in the services sector in our last GDP.
Your comment on services, we're already seeing that services is a significant percentage of our GDP at the moment. So that's something that we're already seeing happening, I think, here in Nigeria. But I'm speaking more specifically to businesses. For example, there's people who sell, online skills, for example. So they're prospecting. So if you think about a lot of the people who at the moment sell digital education, if I could call it that. So they prospect customers, you sign up for a course, you join the entirety of the course online. In most cases don't need to go into any physical room. Those businesses are businesses that essentially we see that the uptake is most rapid. But as I said, there's other types of businesses where you start from prospecting the customer online, but at some point there is some physical good that needs to exchange hands, and that again is an area that we continue to see how we can essentially help people there to get the technology tools that they need, to accelerate their business.
So, we know that we have skills, AI, technology skills in the country, but what about the issue of customizing those skills to actually solve the Nigerian issues and challenges? So who should we put at the helm of affairs here? Who should coordinate these efforts?
I think there is a lot of skills that we have, but I think there's standardization that's required. So, for example, somebody could have 1 month of apprenticeship and open up a shop, and he or she is looking to compete with somebody who has been in business maybe or been doing that same, offering that same service for many years. So I do think that there's some level of standardization that we need to see. Again, I think that is an area where technology can play a role. I just shared on the panel that there is a great idea that we can, maybe potentially push forward. It's like we could call it a Nigeria Open Industrial Data System, where, for example, every business that provides a service to a small business is required to get APIs that a credit organization can call. So let's talk about the skilling that you said. If I own a shop and I have gone to get the requisite skill from an institution that is recognized by the government, and that institution has certified me, that institution can have an API that a credit lending facility can call and say, this person is asking for a loan. Have they got into the minimum required skill level that's necessary for me to say that their credit worthiness number is high enough to get a loan? And that could happen for anything. It could happen for energy, for example. Can we get APIs that can from PHCN or even private power suppliers who would say, look at how much this person has been spending as a business on power. Or your invoice. We can call and see what is your invoicing, your receipts. And based on this body of data, we can start building credit ratings, I think for businesses. Because the access to finance is one of the biggest problems that you see that businesses have right now. So when we provide the skills, of course, as I said, the government is doing a lot there as well, with support from private entities such as ours. We want to make sure that they can get the needed finance that they need as well to be able to scale their business. And I think technology can play a really solid role.
All right, let's get a quick check on what's playing out in the global space. Now, that's for the global economy. At this point, we start off in Denmark. Now, they've raised the economic growth forecast for 2026 to 2.2% from its previous expectation of 2.1% expansion. The country's economy ministry confirmed that today. The ministry also significantly increased its GDP forecast for 2025 to 2.6%. From 1.4%. The upward revisions to Denmark's growth outlook reflects improved economic conditions. That's in the Nordic country. And we see in Sweden now, we see the prices have decreased by 0.3% in November compared to October, according to flash figures released by the Statistics Office today. The data also showed that on an annual basis, consumer prices in Sweden were 2.3% higher than in November of the previous year. These are preliminary inflation figures provide insight into Sweden's current price trends as the country heads towards the end of 2025. All right, to company news now. Salesforce, their third quarter results have topped expectations and raised its full-year outlook, helped by strong demand for its AI products. Shares rose about 5% in extended trading. The company posted EPS of $3.25, beating estimates of 39 cents, and revenue of $10.3 billion, slightly ahead of forecasts. To subscription and support revenue that rose 10% year on year. Let's get a quick check on Bitcoin now. It's been largely steady, after sharply rising above the $93,000 mark in the previous session. That's underpinned by positive regulatory developments and expectations of a Federal Reserve rate cut next week. We're seeing that, keeping the world's largest cryptocurrency there upbeat at this point. It last traded about 0.3% lower in early trade today. The stability is coming after a bruising week there where we saw Bitcoin did drop. There was huge sell-off there, dragged the world's largest cryptocurrency close to about $84,000 level. The rebound was underpinned by the positive regulatory developments in the U.S. And that's it on Business Morning today. Thank you so much for watching. I'm Ladi Williams. I'll catch you again at 1:30. We'll give you what's playing out with major markets that we track. That's in a moment. For me and the team right here at Channels HQ. It's bye for now.